I'll put the I've put all the numbers in the radar screen, so I'll as soon as I've done this, I'll put the radar screen up, okay? But remember, when you look at the radar screen, I've updated the pairs that I've covered tonight, okay? So some of the others might not be relevant. Okay. 81.40 then, and 79.43, two decent levels that we are trading between on the Aussie yen. Now, the Aussie yen can have some very powerful moves because they respond fundamentally in completely opposing ways. That's why you get, the strong versus the weak argument can be manifested in a pretty powerful way in this Aussie yen. So let's take a look at the weekly. It's worth pointing out. It's weekly. I mean, on a weekly, we've had some pretty range bound trading, but with the yen intervention and the continued Aussie strength, we've had 1, 2, 3, 5 weeks up in a row. Not particularly. You can see the tails on these candles are pretty long. I mean, you're getting some choppy price action, but we've grinded a bit higher up. See what I mean by powerful moves? Look at that. So the 79.43 and the 81.40 then. It's the weekly, just give you a picture of what's going on. Let's go back to Baghdady. So you are going to get, if the current behaviour persists, you're going to get some pretty violent swings in this until we take out some levels. And the 81.40 just could be one to the upside. Your structural long and your short-term long is 81.40, folks, because we're above the structure of 79.43, and this is a momentum high, the 81.40. So this is our long point indicated by the blue line, our long point and our structural long, 81.40. So our structural short is going to be the 79.43, and this 79.43, is defined by the highs here, this low, the low of this move here, and it's also been the top of that, the top of this consolidation phase here that lasted nearly 3 months. So 79.43 will be the short, and that will be reverting back into this pattern. This looks very much like the S&P. The 79.43 will be the short, and the nearer term short is actually the low of the 2-day low of 79.81. So maybe you may decide to wait to take your short at 79.43 and you're leaving 40 pips. You're leaving 40 pips or so on the table. Okay, so we're sandwiched in between two structures. Always quite like that scenario. If we go to 200 tick, see what it looks like. It's it's pretty messy. It's pretty wide. The long point is up at 81.40, so a little bit off. We're just out of the picture here on the long point. The short point though is 79.81. The short point is 79.81. I mean, the boundaries are pretty wide from the recent price action. 79.81 is the 1-day low. That's our short. Our short stop's going to be the 80. We're not going to afford ourselves any wide stops in this sort of price action, because we'll just get whipped around. You've got to have a close stop here. So when we take out the 1-day low, we'll have our stop just above the 80. And on the long side, if we go long at 81.40, okay, we're going to have our long stop at 80.94, which is the 1-day high. So the reason for that is that we'd have to take out the 4-day, 3-day, 2-day, and 1-day highs in order to get stopped out. So there's plenty to keep a lid on it there. Okay. So the long point is 81.40. The long stop is 80.94. The 1-day high. Okay. Let me stop that recording.